Welcome to our video on the interest rate of Visa cards. If you're considering applying for a Visa card or already have one, it's essential to understand the interest rate associated with it. In this video, we'll explore the interest rate on Visa cards and explain how it can impact your finances. Let's get started. Understanding annual percentage rate, April. The interest rate on a Visa card is expressed as the annual percentage rate, or April. It represents the cost of borrowing money on the card over a year, expressed as a percentage. Variable versus fixed interest rate. A variable rate. Many Visa cards have a variable interest rate. This means that the rate can fluctuate based on changes in the market, such as the prime rate or the issuer's discretion. The variable rate is often tied to a benchmark, and as the benchmark rate changes, the card's interest rate may change as well. B. Fixed rate. Some Visa cards offer a fixed interest rate, which remains consistent over time. This means the rate won't change, regardless of market conditions. Fixed rate cards provide more stability and predictability in terms of interest charges. Determining the specific interest rate. A. Check the terms and conditions. When you apply for a Visa card, carefully review the terms and conditions provided by the card issuer. The April will be clearly stated in this documentation. B. Contact the card issuer. If you already have a Visa card and are unsure about the interest rate, reach out to the card issuer's customer service. They can provide you with the specific rate associated with your card. Factors that influence the interest rate. A. Creditworthiness. Your creditworthiness plays a significant role in determining the interest rate you'll be offered. Those with a higher credit score and a positive credit history generally qualify for lower interest rates. B. Card type and features. Different Visa cards may have varying interest rates based on the card type and features offered. Cards with additional perks or rewards programs may have slightly higher interest rates. Managing the interest rate. A. Paying in full. To avoid paying interest on your Visa card, the best approach is to pay your balance in full and on time each month. This way, you won't accrue any interest charges. B. Paying on time. If you carry a balance on your Visa card, ensure you make at least the minimum payment by the due date. Late payments can result in additional fees and penalties. C. Paying more than the minimum. If possible, pay more than the minimum payment required. This helps reduce the amount of interest you'll pay over time. Conclusion. The interest rate on a Visa card, represented by the annual percentage rate, April, is an important factor to consider when using credit. Understanding the terms and conditions associated with your Visa card and managing your payments responsibly can help you minimize interest charges. Whether you have a variable or fixed interest rate, it's essential to pay attention to your creditworthiness and make timely payments to avoid unnecessary interest expenses. By being aware of your card's interest rate and implementing good financial habits, you can make the most of your Visa card while keeping your overall costs under control.